Welcome to our channel. Today we're diving into the world of sustainable investing. With climate change concerns and growing awareness, investing in sustainable stocks has become a powerful way to build wealth while supporting companies that make a positive impact on the environment and society. In this video, we'll explore what sustainable stocks are, why they matter, and how they can help you secure long-term financial growth. Don't forget to subscribe for more insightful content on smart investing. Number 5, environmental impact. Investing in sustainable stocks offers significant environmental benefits. Companies that prioritize sustainability typically focus on reducing their carbon footprints, conserving resources, and promoting eco-friendly practices. These businesses often engage in renewable energy production, efficient waste management, and sustainable agriculture, all of which contribute to a healthier planet. The demand for eco-conscious products and services has surged in recent years, as more consumers and investors seek environmentally responsible options. By choosing sustainable investments, individuals and institutions are supporting companies that are actively working to mitigate climate change and reduce their negative impact on ecosystems. These actions include reducing pollution, decreasing greenhouse gas emissions, and promoting biodiversity. Sustainable businesses also tend to be more innovative in developing new technologies that benefit the environment, such as electric vehicles, clean energy solutions, and biodegradable materials. As a result, the investment in these companies supports the broader global effort to combat environmental degradation and create a more sustainable future for future generations. Additionally, these companies may benefit from regulatory incentives and increased public support, contributing to their long-term growth and success while driving positive environmental change across industries. Number 4, financial growth. Sustainable investing has increasingly become a pathway to financial growth. As awareness of environmental, social, and governance (ESG) factors grows, investors are recognizing that sustainability can lead to stronger returns over time. Sustainable stocks are often tied to industries and technologies that are at the forefront of innovation, such as renewable energy, clean technology, and green transportation. These sectors are expected to see substantial growth as governments and companies around the world prioritize sustainability and shift towards more environmentally friendly practices. Investors in sustainable stocks are not only supporting the transition to a greener economy, but are also positioning themselves to benefit financially from these changes. Companies with strong ESG initiatives are often more resilient in the face of economic downturns, as they tend to have better risk management practices and long-term planning strategies. Furthermore, these companies are less likely to be exposed to environmental or regulatory risks that could impact their financial stability. By focusing on businesses that are actively addressing the challenges of sustainability, investors are tapping into high-growth opportunities that align with global trends, ultimately driving higher returns in the long term while contributing to a sustainable future. Number 3, risk mitigation. Sustainable investing provides a unique advantage in terms of risk mitigation. Companies that embrace sustainability tend to be more forward-thinking, focusing on long-term stability rather than short-term profits. These businesses are better equipped to handle changing regulations, shifting market demands, and increasing environmental challenges. By investing in companies with strong ESG, environmental, social, and governance practices, investors reduce their exposure to risks related to climate change, resource scarcity, and social issues. These companies are also more likely to align with future regulations and global agreements on climate change, making them less vulnerable to penalties or legal challenges. For example, governments worldwide are increasingly introducing policies that promote sustainable practices such as carbon taxes, emission regulations, and environmental standards. Companies that do not adapt to these changes may face substantial financial penalties, reduced consumer demand, or even legal action. On the other hand, sustainable businesses are more likely to thrive in this environment, benefiting from regulatory incentives and consumer preference for eco-friendly products and services. By focusing on these companies, investors can protect their portfolios from risks associated with outdated business practices and contribute to the development of sustainable solutions for global challenges, ensuring financial stability and growth. Number 2, Ethical investing. Ethical investing, a cornerstone of sustainable stocks, involves aligning investment choices with personal values. This approach focuses on supporting companies that prioritize ethical practices, social responsibility, and environmental stewardship. By investing in sustainable businesses, investors contribute to the broader goals of social justice, environmental protection, and ethical governance. These companies often emphasize fair labor practices, diversity and inclusion, and community engagement, which resonates with individuals seeking to create positive social change through their financial decisions. The growing demand for ethical investing reflects a broader societal shift towards more responsible consumerism and business practices. Investors can avoid companies involved in activities that conflict with their values, such as those contributing to pollution, exploitation, or human rights abuses. Ethical investing also encompasses the promotion of fairness, transparency, and accountability in corporate governance, ensuring that businesses operate with integrity and respect for stakeholders. By choosing sustainable stocks, investors support companies that are making a tangible difference in the world while achieving financial returns. The practice of ethical investing not only benefits the investor's portfolio, but also drives positive societal change by encouraging businesses to adopt more responsible and inclusive practices, ultimately fostering a better world for future generations. Number 1. Future-proof portfolio. A sustainable investment portfolio is often considered a future-proof portfolio. As the world shifts towards more sustainable practices, traditional industries and companies may struggle to adapt to changing market conditions and regulations. In contrast, companies that focus on sustainability are better positioned for long-term success. By investing in industries and businesses that are aligned with global sustainability goals, such as clean energy, waste reduction, and responsible supply chains, investors are preparing their portfolios for the future. The rapid transition to a green economy, coupled with advancements in technology and global policy changes, is expected to drive demand for sustainable products and services. Companies that are early adopters of sustainability are likely to benefit from these trends and become market leaders. A future-proof portfolio ensures that investors are not only securing their financial future, but also contributing to a global movement towards a more sustainable and equitable world. Furthermore, as public awareness of environmental and social issues continues to grow, consumers and businesses alike will increasingly favor companies that prioritize sustainability, which in turn will increase the profitability and stability of these investments. By focusing on sustainable stocks, investors are positioning themselves at the forefront of the future economy, ensuring long-term wealth accumulation while supporting positive global change. Thank you for watching. We hope this video helped you understand the importance of investing in sustainable stocks for long-term wealth. If you found it valuable, please give us a thumbs up and share your thoughts in the comments. Remember to subscribe for more tips on building a sustainable investment portfolio.